Financing a vehicle can feel overwhelming, but today's variety of options gives car buyers more flexibility than ever. Traditional banks like Chase and Wells Fargo, along with credit unions, are common choices. However, many buyers overlook a potentially easier option: dealer financing. In this video, we'll compare dealer and bank financing, outlining the pros and cons to help you choose the best option for your needs. But before starting the video, be sure to smash the like button and subscribe to never miss out on any of our videos. Dealer financing versus bank financing. What's the difference? The primary difference between dealer financing and bank financing lies in convenience and accessibility. When you finance through a dealership, you're allowing the dealer to act as an intermediary between you and potential lenders. The dealership's finance team takes on the task of finding the best loan offer for you, often leveraging relationships with various financial institutions, including those you may already know and some you might not have access to on your own. This contrasts with directly applying for a loan at a bank, where you are typically limited to the products and rates that specific institution offers. Without the competitive pressure that dealerships can generate among lenders, banks have little incentive to provide additional benefits or lower rates. Ease of the loan process. One of the most significant advantages of dealer financing is the streamlined loan process. The dealership's finance team handles most of the legwork, from gathering necessary documentation to submitting loan applications to multiple lenders on your behalf. This can save you valuable time and effort, especially if your credit is less than perfect, or if you prefer to avoid multiple trips to a bank. When you apply directly through a bank, you're responsible for completing all the required paperwork and waiting for the bank to process your application. This can be time-consuming, particularly if you're comparing offers from multiple banks, or if you need to make several trips to finalize the loan. Access to multiple lenders. Dealer financing also provides access to a broader network of lenders. If one lender declines your application, the dealership can quickly move on to another, increasing your chances of approval without requiring additional paperwork. In contrast, if a bank declines your application, you'll need to start the process over with a different institution, which can be frustrating and time-consuming. In summary, while both options have their advantages, dealer financing often provides greater convenience and a higher chance of securing a favorable loan due to the competitive environment and broader access to lenders. Dealer financing versus bank financing. Whose lending rates are best? One of the most critical factors in choosing between dealer financing and bank financing is the interest rate you'll receive on your loan. Generally, banks are known for offering competitive rates, especially to customers with excellent credit. However, the lack of competition when dealing directly with a bank can mean that you're not getting the best possible rate. In contrast, dealerships create a competitive environment among lenders, encouraging them to offer their most favorable rates to win your business. This competition often results in better rates than you might find by going directly to a bank, particularly if you have a strong credit profile. However, it's essential to be aware of potential markups. Some dealerships may add a percentage point or two to the interest rate they secure from the lender as a way to increase their profit margin. Always ask for a breakdown of the rate and fees to ensure transparency. Why dealer financing might be the better option. Number 1. Simplicity and convenience. Dealer financing stands out for its convenience. You can handle everything, from choosing your vehicle to securing financing, all in one place, streamlining the car buying process. This saves time and effort, especially since dealerships work with multiple lenders to find financing that fits your needs. Number 2. Competitive loan rates. Dealerships often offer special financing programs that banks don't, like low or 0% APR on new vehicles. These promotional rates can lead to substantial savings. The dealership's finance team is also skilled in navigating these offers to find the best deal for you. Number 3. Options for all credit types. Dealer financing is more accessible for those with lower credit scores. Many dealerships partner with lenders who specialize in subprime loans, making it easier to secure financing even if your credit isn't perfect. In contrast, banks usually require higher credit scores and offer fewer options for those with poor credit. The pros and cons of bank financing. While dealer financing offers several advantages, bank financing also has its strengths. Here's a closer look at the pros and cons of financing through a bank. Pros of bank financing. Number 1. Transparent interest rates. Banks offer straightforward, no markup interest rates, which means you're getting the rate that's been set by the institution, with no dealer-added percentages. This can provide peace of mind, knowing that you're not paying more than necessary. Number 2. Long-term relationships. If you already have a relationship with a bank or credit union, you may be eligible for loyalty discounts or special rates. Additionally, your bank may offer more flexible repayment terms if you're a long-standing customer. Number 3. Consistent terms across institutions. When you finance through a bank, the terms of your loan are clear and consistent, with fewer surprises. You'll know exactly what you're signing up for, including the interest rate, repayment period, and any fees. Cons of bank financing. Number 1. Limited options. Banks offer fewer loan products, which may not suit specific needs or unique vehicles, as well as dealer financing. Number 2. Stricter requirements. Banks often demand higher credit scores and lower debt-to-income ratios, making it harder to get approved if your credit isn't strong. Number 3. Lengthy process. Bank loans can be time-consuming, requiring more paperwork and multiple visits for approval and finalization. When should you choose bank financing? Despite the advantages of dealer financing, there are situations where bank financing may be the better option. If you have excellent credit and a strong relationship with your bank, you may be able to secure a highly competitive rate with favorable terms. Additionally, if you prefer a more hands-on approach to financing and want to avoid potential markups, working directly with a bank might be the way to go. Bank financing is also a good option if you're looking for a specific type of loan, such as a secured loan that uses your vehicle as collateral, or a personal loan that doesn't require a down payment. These types of loans are less common through dealerships, but may be available through your bank. Final considerations. Ultimately, the decision between dealer financing and bank financing depends on your individual needs, preferences, and financial situation. Both options have their advantages, and the best choice for you will depend on factors like your credit score, the type of vehicle you're purchasing, and how much convenience matters to you. Dealer financing. The convenience factor. If you prioritize convenience and want to streamline the car buying process, dealer financing is likely the better option. The ability to handle everything in one place, combined with access to a broad network of lenders and special financing programs, makes this a compelling choice for many buyers. Bank financing. The security and transparency. On the other hand, if you prefer the security of working with a trusted financial institution and want to avoid potential markups, bank financing may be the better choice. The clear and consistent terms offered by banks, along with the potential for loyalty discounts, can make this a smart option for those with strong credit. In the end, both dealer financing and bank financing offer viable paths to owning a new or pre-owned vehicle. The key is to understand the pros and cons of each option and choose the one that best aligns with your needs and financial situation. Whether you opt for the convenience of dealer financing or the transparency of bank financing, being informed will help you make the best decision for your car purchase. Thank you for watching. If you liked our video, then hit the subscribe button to never miss out on any of our videos. See you next time.